Nimesh spoke about Lupin. Clearly, that shot of hum insulin has helped a lot of institutional investors. But we have a big guest joining us.
Indeed, we've got Tushar Pradhan, the director of Hexagon Partners LLP, on the show with us on the last day of 2024. Tushar, thank you very much for joining in. So give us, briefly first, the outlook for 2025. It's hard to imagine that after 9 good years, positive years on the trot, that again in the 10th year will also give you the kind of returns that we've seen. Maybe not at the index level, but the kind of money that people have made in mid and small caps. What's your view going into next year?
Yeah, I think there is always a mean reversion to all markets, and we all get worried, especially the more statistically oriented, to saying that there has been 9 significant years of positive performance. So is this a year for where the mean reverts? It's a difficult one to call, but I think one has to again understand that the economics in terms of what we talk about where our country is positioned today vis-a-vis the rest of the world, I think it needs to be called out that we are in a much better position than most economies. If you say that, is it going to be a 10th year of positive returns? I think that is making me a crystal ball gazer, which I'm not. But I think if I look at earnings growth and what would the market support over the next few quarters, I think the earnings growth, if it continues to remain pretty much in double digit, we are going to have a reasonable positive year this year, would be my guess.
Okay. Hi, Tushar. Always a pleasure having you with us. Well, I know crystal ball gazing is not very easy, but I'm torn between 2 extremes. On the one hand, for all the defeatism and pessimism we heard in 2022 end and 23, there was no recession. I mean, far from it. The US economy churned out among its best GDP growth rates that we have seen in a long time. The Indian economy, yes, 5.4 may have been a disappointment, but overall, a 6.5 or 6.7% growth is to kill for in a world like this. So should we be go with those optimists, or should we worry about the fall in urban consumption, which clearly stocks FMCG stocks? And right now I'm reading data about US credit card defaults jumping to their highest level since 2010. So unsecured loan seems to be everybody's problem. Which way would you tilt?
Again, as I said, I think we generally tend to make a overall prediction for the market as such. But the market is made up of many components, especially so very startingly in the US, where the Magnificent Seven seem to have led most of the gains in the market. And if you look at the rest of the 493 stocks, you will hardly find companies which are even near to the kind of returns that these 7 have managed to make. And when you have a stock-weighted index which weights in favor of these large caps, especially in the US, you get the kind of return that we've seen. So it is not really the US market that we are talking about. And when we talk about the economy, it's much more broader. And people then try to look at a K-level recovery where there are a certain segment of companies which will do exceedingly well, no matter where the rest of the economy likely to go. I think in India, we will not have a similar kind of recovery. India is a lot more, I would say, homogeneous market. I think there are a lot of contributing factors which will lead to market progress here. And I'm more optimistic that in India, there will be a more widespread, I would say, all-inclusive growth, as opposed to in the US, where it was sharply in favor of certain companies. In India, I think the game is really about increase in productivity. What we're going to see is not just pure earnings growth, but earnings growth coming out of significant technological inputs in terms of having companies perform better, which is a structural change. So I would vote for the fact that India will do well on the basis of pretty significant earnings growth coming in for this year as well as the next.
Tushar, so construct a portfolio for us starting 1st of Jan. For every 100 rupees that you have in terms of incrementally that you need to put in the market, how would you position it?
I think it's very important to understand that the financial part of our economy, which is going to drive the entire growth forward, has actually been lackluster in the last year. If you look at private banks, even if you look at certain public sector banks, they've not really participated in the kind of growth that we've seen elsewhere in the economy. with a significantly different balance sheet that we will see for them here, which is probably the lowest level of NPLs that we've seen in a decade. Pretty secure equity capital, as in adequacy, as we call it, and pretty benign interest rate scenario in the sense that we are not looking at a very sharp fall from here, which will indicate that their net interest margins are likely to be very, very, I would say, robust going in the future. Given the fact that they've really taken a lot off from valuations, I would definitely make financials a very large part of my portfolio to begin with. I will follow that up with companies which are export oriented. We already have seen some sort of a indication of a strong dollar, what it means for the emerging market currencies. And I think as long as we then become a lot more competitive on the basis of the currency, or just the fact that your reported earnings will be so much more attractive when you have a falling rupee, I think that's my second bet. And that actually goes across sectors. And the third bet I would think would be on companies which are really focused on domestic manufacturing, because that is something that we've not really seen come through. We've seen capex done by public sector units. We've seen general government capex coming through, but we have not really seen the private capex take off. If any of that happens, we will see a lot in terms of process industries as well as manufacturing actually take off in India towards the last half of the next financial year. And I think that would be my bet to make up the third element of my portfolio. As a satellite part of the portfolio, where I would say, where else would you put your money apart from these three main sectors? I think I will take a selection of some pharma. I would take some, I would think construction along the way, because that is part of the game that I think the next year is likely to make.
Okay, that's most helpful, Tushar. For those who are building their own portfolios, that's a lot of good advice. Thank you very much for being with us through 2024, and hope you have a laughter-filled, fun-filled 2025.
Thank you. Thank you so much.
Okay, as we slip into a break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store or the Google Play Store.